Introduce Stephen and Michelle from Basquet. As I think we talked about earlier, and Brian Brooks mentioned that stablecoins play a particularly critical role within the whole ecosystem here. And Basquet is building a new type of yielding stablecoin in a security wrapper. And obviously they'll dig into that. Just a brief background on Stephen. Spent a large part of his career at Guggenheim, building and structuring unique products. He's been in the blockchain space building for 5 years. He started an asset management company that was acquired by Galaxy Digital. And also Michelle Tang, with experience as an investor in both traditional capital markets, fintech, and blockchain. She was previously at Cantor Ventures and a co-founder of Theseus Capital with Stephen. And I'll turn it over to them, but excited to hear what they have to say and what they are building.
Awesome, thank you for having us. So I think maybe it'd be fun to start talking about some trends that we're seeing in kind of the regulated blockchain space. So I was in New York a couple of weeks ago, and I had very interesting conversations around traditional finance people doing novel structured products. And what I mean by that is they're actually creating structures that allows access to more regular investors in terms of like refineries and sort of government-owned assets. And then they're creating a structure that allows it to be rated. And that's super, super interesting because then you can create these micro bonds with novel assets. But what's even more interesting is you can actually make them blockchain based, because that means that there's more global distribution. And so I think like there's going to be all of this different creativity, and it's going to open people's minds. And I think it'll actually be impactful, not just from an economic standpoint, but also from like a geopolitical standpoint, in terms of taking assets that were once public and making them private and accessible. I think another thing that's interesting is which has been mentioned many times earlier, but NFTs and kind of the idea of being able to create a basket of NFTs and maybe even, taking pieces of art, creating a series of NFTs that represent a physical piece of art, and then actually producing yield from that art because you're leasing it out. So I think there's just so many creative, interesting things that can be done. So I just wanted to start with that excitement, and Stephen will talk a bit more about our product.
Yeah. So what's really exciting about everything that Michelle just brought up is, I want to say about 10 years ago, I made the switch over from managing more institutional accounts like pensions, endowments, and insurance companies to getting more into the retail business. It was when Guggenheim acquired a small ETF and mutual fund shop, and we decided to grow it with our more esoteric type strategies. And once we started launching our first ETFs and realizing how fun it was and the potential, we began to look into some of these exact things that NFTs are now solving. We were afraid of inflation after, at that time, 10 years ago, the central banks were printing money. Not quite at the scale that they're printing today. And we were actually looking at a way to put fine art into an ETF, as well as some of these other structures that Michelle spoke about, and some of these other ones that we're looking at today. And the bottom line was you just couldn't do it. No matter how hard we tried, no matter what law firm we hired to help us, we couldn't figure out how to get it inside an ETF. Blockchain has changed all that, and it's one of the things that I'm very excited about as Michelle and I and our other co-founder Jason embark on this journey of building securities that can now hold things that are a little bit more unique and esoteric that the market wants. What we're doing first is we're starting with a new take on a stablecoin. What Basquet is building is a basket of currencies that is wrapped in a security, and we've decided to go the security route mainly because of a lot of the pressures that we hear being forced down from regulators. A lot of stable coins are being looked at very closely and under much scrutiny, including things like Tether and USDC and others. And we've decided that, eventually a lot of stable coins are going to have to either be issued by a bank or issued as a security itself. So we've created a security wrapper in order to wrap this basket of currencies. The currencies will also have a yield in and of itself without having to stake it or do any kind of repo or DeFi type program. And that becomes really interesting. It becomes more like a money market mutual fund for exchanges, which is something that they don't currently have now. It reduces risk and allows you to earn an income in a safe instrument. So at the moment, when you trade out of your Bitcoin or your Ethereum or whatever else is you're trading, you're moving into typically a stable coin or into cash. And that creates a lot of risk for exchanges. Risk that a lot of people don't realize that they have. It's cash sitting in a bank or sitting on the company's balance sheet. And that cash is only insured collectively across all accounts up to the FDIC limits. And it's the very reason why when you trade on E-Trade or Schwab or one of these other platforms, brokerage platforms, your cash is immediately swept into a money market mutual fund, earning you 0.01%. So essentially this instrument can be used in the same type of way on crypto exchanges and hybrid exchanges that issue both cryptocurrencies and security tokens. And that's really our plan. The reason why we chose a basket of currencies, it was actually an original idea that Michelle and I had over 3 years ago, I can't remember how long it was now. At the time, there wasn't a market for it, but now there is, given that the US is printing an exorbitant amount of money. A lot of trading is happening more globally. Commerce is happening more globally from an electronic standpoint. So having a basket that somewhat simulates SDRs is pretty attractive at the moment, in our opinion. This is just the beginning of what we plan on doing. We do plan on using a similar structure to go into, in some cases, NFTs. What I like about NFTs, and like I said before, is that you can actually put inflation protection instruments in them. You can have an NFT that holds fine art. That art can also yield you an income through various ways. It can hold wine, bourbon. There's various different types of assets that grow at or higher than an inflation rate that an NFT type structure can support, and particularly in a security structure that we're creating and the background for that.
And I also think, to that point, as the space grows and as possibly more and more institutional interest comes to fruition, and if you believe that the DeFi space is going to grow, I think the different products that we're building that are regulated are going to be attractive to institutions, assuming there is going to be some sort of regulation. And so what that means is that there could be a changeover in certain jurisdictions as to what stablecoins they can use in certain DeFi environments.
Yep. And we left time for questions.
All right, wonderful. Well, is there anyone that has any questions for Michelle or Stephen right now?
I have a question.
All right, Howard, go right ahead.
So maybe you can talk a little bit about what your revenue model is, because you're more like a traditional asset management company or mutual fund company, it sounds like. So where does your revenue come from, and how do you charge?
Yeah, that's exactly what we're like. We're structured as an asset management company that's building cool things technology wise, and for the products that we create, we earn management fees in the same way that any other asset management company would.
Right.
All right, unless we have any questions coming up. Oh, actually, Omid has a question here. What are the tax consequences for stablecoins inside a security wrapper for users?
Yeah, well, I'm not a CPA, but from the way that we look at it, you can, when you wrap it in a security like this, what a lot of people try to do initially with securitizing stable coins was putting it into a traditional hedge fund GPLP structure, closed-in hedge fund, which brings with it K1 issues. In the structure that we're utilizing, it is short-term and long-term capital gains, same as an ETF or most ETFs for that matter, as opposed to property, which I believe is what things like USDC and Tether are treated as.
Okay, great. Well, with that, we will leave it. So Michelle, Stephen, thank you both so much for your time today. It's really nice to see you all again and to share what you're doing with the audience.
Absolutely. Thank you so much.
All right, we'll see you soon.